The United States claims to have over 8,000 tons of gold. But what if I told you no one's seen that gold in decades? Supposedly, these bars are stored in heavily guarded vaults, the most well-known being the Fort Knox Bullion Depository in Kentucky, which alone is said to hold around 4,580 tons, almost half of the country's gold. The rest is split between the U.S. Mint and the Federal Reserve Bank of New York. In total, the U.S. reserves have supposedly remained at around 8,100 tons for decades, with only minor fluctuations. But here's where things get interesting. The official accounting value, or book value, of this gold is set at a ridiculously outdated price of $42.2 per ounce. That means, on paper, all this gold is only worth around $11 billion. The problem? At today's market prices, that gold would be worth hundreds of billions of dollars. Now, you'd think something this important would be regularly checked and verified, right? It should be. But it's not. The U.S. gold reserves haven't been properly audited in decades. Recently, something odd has been happening. U.S. banks have been flying in thousands of gold bars from London to New York, sparking all sorts of speculation about what's really going on. So the big question is, if we cracked open those vaults today, what would we actually find? Why won't the government just do a full audit and show us? And if some of that gold is missing, how would it impact everyday people? It's one of the most fascinating financial mysteries out there, and that's exactly what I want to dive into. Good day, my name is Nyoka Bromley, and you're watching my YouTube channel Gold Rush Gal. Hope you're doing well. Gold has always been a huge part of America's history and mythology, but for decades, there have been whispers that the United States doesn't have all the gold it claims. So how did the U.S. even end up with over 8,000 tons of gold in the first place? Back in 1933, during the Great Depression, President Franklin Roosevelt scrapped the gold standard for us citizens and ordered the confiscation of most privately held gold under Executive Order 6102. Americans were forced to hand over their gold, coins and bullion to the government in exchange for paper dollars. It was massively controversial at the time, but it resulted in a huge influx of gold into the U.S. Treasury. To store all this gold, the Fort Knox Depository was built in 1936, and by 1937, trainloads of seized and surrendered gold were being moved into the vaults. Then, as global tensions ramped up before World War II, the U.S. received even more gold from other nations looking for a safe place to store it. By the end of 1941, America's gold reserves had peaked, with Fort Knox alone holding over 20,000 metric tons. At that time, the U.S. controlled around 23% of the world's official gold supply, an unprecedented concentration of wealth in history. This was all tied into the global monetary system. Under the 1944 Bretton Woods Agreement, the U.S. dollar was pegged to gold at $35 per ounce, and other currencies were linked to the dollar. America's massive gold stockpile gave the world confidence in the dollar's value. But things changed. In the post-war decades, from the 1950s to the 1960s, U.S. gold reserves started to decline as America ran trade deficits and spent big on international commitments. Countries that had been holding U.S. dollars began demanding gold in exchange for their paper money, which was allowed under the Bretton Woods system. Gold started flowing out of U.S. vaults, and by 1971, reserves had dropped to roughly the levels they are today. So what did the U.S. do? Well, it pulled the rug. On August 15, 1971, President Richard Nixon closed the gold window, ending the ability to convert U.S. dollars into gold. This effectively broke the Bretton Woods system and shifted the world onto a pure fiat, or paper, currency standard. At that point, the U.S. decided to keep what gold it had left rather than letting other nations continue redeeming it. But here's something most people don't realize: the Federal Reserve doesn't own any of the country's gold. Since 1934, all federal gold has been held by the U.S. Treasury. What the Fed does have is a claim to it in the form of a gold certificate issued by the Treasury. This certificate is recorded on the Fed's balance sheet and values the nation's entire gold stock at just $1 billion because it's still priced at that outdated $42.2 per ounce. Even though the U.S. dollar is no longer backed by gold, the reserves still play a role in shaping its perceived value. But that raises the big question: if the gold is still there, why won't the U.S. Treasury allow a proper audit? And if it's not there, what would that mean for the global economy? Since 1973, the official book value of U.S. gold has been fixed at $42.22 per ounce, totaling around $11 billion on paper, but in reality, the market value of that gold is way higher. However, the U.S. Treasury doesn't mark to market its gold reserves, meaning they don't update the value based on current gold prices. If they did, those reserves would be worth hundreds of billions of dollars today. So why hold on to so much gold? Well, it's seen as a hedge against currency risk. Senator Rand Paul once pointed out that while the US dollar isn't backed by gold anymore, gold still gives the dollar implicit value and serves as a symbol of financial stability carried over from the past. But here's the interesting part: if the Treasury did update the value of its gold reserves to reflect market prices, it could issue more gold certificates to the Federal Reserve in exchange for additional dollars. That means revaluing the gold could add hundreds of billions to the Treasury's assets, helping reduce the national debt and stabilize the economy. So why don't they just do that? This is where the conspiracy theories come in. Despite official claims that the gold is safely stored in Fort Knox and other vaults, many people don't believe the government. The secrecy surrounding these reserves fuels speculation that something's not right. In the 1960s and 1972, there were claims that much of Fort Knox's gold had been secretly removed, with rumors suggesting that President Lyndon B. Johnson shipped tons of US gold to London in the late 1960s. Some believe the US may have loaned or sold off portions of its gold without the public's knowledge, turning Fort Knox into an empty fortress guarded just for show. Others argue that while the gold is there, it doesn't actually belong to the US. Historically, Fort Knox safeguarded gold from foreign nations during World War II and the Cold War. While the US government insists that most foreign-owned gold was returned, some suspect that at least part of what's in Fort Knox still belongs to other countries. Then there's the theory that some of the gold is actually counterfeit. Because tungsten has nearly the same density as gold, it's possible to create gold-plated tungsten bars that pass weight tests. This theory gained traction after an unverified 2009 report claimed that China received a batch of fake gold bars. While this report was never confirmed, it fueled speculation that even Fort Knox might contain fake gold. During the 2008 financial crisis, some theorized that the US secretly sold or leased out its gold to suppress prices or raise cash. If that were true, it would explain why the government is so reluctant to conduct a full audit. So, why doesn't the government just audit the gold and put these theories to rest? Well, officials claim the gold is regularly audited, but there has never been a full, publicly released audit. The last major review happened in 1953, when President Dwight Eisenhower ordered a limited inspection following rumors that wartime spending had drained the gold reserves. However, this audit only checked about 5-7 of the gold bars, and no full inventory was conducted. By the 1970s, concerns about gold resurfaced due to inflation and economic instability. In response, the government staged a PR stunt in 1974, opening Fort Knox to about 100 congressmen and media representatives. They were shown stacks of gold bars and even allowed to hold some for photos. But this wasn't a real audit, only one vault was opened. No bars were weighed or tested, and serial numbers weren't verified. From 1975 to 1981, the US Treasury and General Accounting Office conducted yearly audits of portions of the gold, verifying about 80% of total reserves. But after 1981, these audits stopped, and today, the government insists the gold is regularly inventoried without releasing details. The last high-profile visit was in 2017 when Treasury Secretary Stephen Mnuchin, Senator Mitch McConnell, and other officials toured Fort Knox. Mnuchin later tweeted, "Glad the gold is there." But again, this wasn't an actual audit, just another photo op. Fast forward to today, and gold is back in the spotlight. Reports show that banks have been flying over 8,000 gold bars, about 2% of total reserves, from London to the US. Some see this as proof that the US is out of gold, but the real reason is more about banking strategy, something called arbitrage. JP Morgan and HSBC are literally flying gold bars across the ocean from London to New York. They're doing it to cover their short positions and make a little extra cash while they're at it. Right now, gold is about $20 more expensive per ounce in New York than in London. That might not sound like much, but when you're dealing with billions of dollars worth of gold, it adds up fast. JP Morgan and HSBC are what's known as gold market makers. They move gold around the world and provide liquidity to buyers and sellers. A big part of their business is gold leasing, where they lend out physical gold to banks, investors, and institutions in exchange for interest. But here's the catch: when they lease gold out, they hedge their risk by selling gold futures in New York. Basically, They're betting that the price of gold stays stable so they don't take on unnecessary risk. But something went wrong. Geopolitical tensions, especially with Trump's new tariffs, caused gold prices in New York to spike higher than in London. That meant the bank's short positions their gold futures bets started bleeding money. To stop the losses, they're physically moving gold from London to New York to settle their futures contracts and close those short positions without taking massive hits. This process is called arbitrage. By shipping physical gold to New York, they can sell it at the higher price, use that money to cover their short positions, and maybe even pocket a little profit on the side. JP Morgan alone is reportedly moving over $4 billion worth of gold across the Atlantic this month. That's what's really happening. It's not necessarily some grand cover-up for Fort Knox. But even that explanation isn't enough to silence all the skepticism. Even Elon Musk has suggested that we should audit Fort Knox, maybe even live stream it. I mean, who wouldn't want to see what's inside? So why won't the government do it? Is it really about security, or is there something to hide? The interesting thing is the mixed messages we get. Economists like Barry Eichengreen and central bankers say the Fed and Treasury have no reason to lie about the gold. They argue that faking it would be a massive scandal with little benefit. But I don't quite buy that. There's plenty of incentive not to be fully transparent. On one hand, officials tell us everything checks out, and on the other, you have Elon tweeting, and it's gone. No wonder people are skeptical. We're supposed to trust that this massive treasure, one that's never fully audited in public, is perfectly intact. The funny thing is, the government could shut down 99% of these suspicions with a full independent, bar-by-bar audit. Instead, they rely on insiders to verify it, claiming cost, security concerns, or that it's unnecessary. Whatever the reason, the reality is we don't actually know if the gold is still there. And the fact that we don't know is a problem in itself. If it turned out the US gold reserves were missing, it could trigger a massive global financial crisis. The dollar's credibility could collapse, inflation could spiral, and countries might start demanding a return to gold-backed currencies. It could be one of the biggest economic disasters in history. That's why we should demand answers. The gold is either there, or it isn't. It's time we find out. For now, there's no hard evidence that any US gold is missing. Everything suggests it's still there, safe and sound. Maybe one day Elon really will live stream Fort Knox. But even if he did, would we really know what we were looking at? I know I wouldn't. And that brings us right back to where we started. A live stream isn't an audit. I didn't get to lick the gold bars myself. But you know what would actually solve this? A real independent audit. I guess we'll see what happens. In the meantime, I'd love to hear your theories. What do you think is going on? Let me know in the comments. And if you enjoyed this, smash that like button, subscribe if you haven't already, and I'll see you next time. Take care.